finally, our final learning objective is the stock markets and how are they different. Two major exchanges where we buy our stocks are New York Stock Exchange and the NASDAQ. Both of these exchanges have IPOs, initial public offerings, and they have secondary market transactions. So IPOs are known as primary market transactions, and secondary market transactions are where you and I buy our stocks after these stocks have been previously issued in an IPO. And that's basically where you have to participate in the founding of a company to get in on that IPO, or maybe be a major client of one of the big investment banks to get in on those IPOs. Huge amounts of trading daily at the New York Stock Exchange. Down on Wall Street, average daily trading volume in excess of $70 billion. At the NASDAQ, which is the newer of the two exchanges, in excess of almost $140 billion per day. That's a lot of stocks being traded. In terms of shares, 3 to 5 billion, and these volumes keep going up as the years go by. Values of IPOs on the order of 25 to 30 billion currently. That will get higher in the future. A number of listed corporations, 3,000 to 4,000 listed corporations on these two exchanges. NYSE was acquired by ICE, Intercontinental Exchange, recently, and the NASDAQ is still the NASDAQ. NASDAQ is a dealer market where they buy and sell from inventory like a car dealer or a book dealer, and the New York Stock Exchange is an auction market where brokers are matchmakers, and they arrange transactions between investors who want to buy and investors who want to sell. A dealer is willing to buy at bid, dealer is willing to sell at ask. The bid-ask spread is the source of their profits, and this happens in all areas of the economies. Like I said, dealers sell cars, dealers sell books, student bookstore being one of them on many college campuses is a primary market and a secondary market textbook transactor. You may buy this full finance book of ours for $108. They may buy it back from you for $50, typically before finals week, which is, I'm not sure why you would want to sell the book before finals week, but you'll get your maximum price then. My daughter tells me. She used to work at one of the bookstores on campus. Next semester, they'll dust that book off, maybe, put a sticker on it, used, and sell it back for $75, and the bid-ask spread in that case is a very healthy $25. Here's a game, the GameStop Madden 2022 or Madden 2020X, sold by GameStop. The IPO price $59.99. They'll buy it back to you for a couple bucks. They'll resell it used to the next customer for $20, and the bid-ask spread is about $18. And that's another way for GameStop to make some money. The bookstores contend that they make most of their profits from used books, not from new books. Most of the profits from new books go to the publisher and to the authors. Brokers bring buyers and sellers together in the matchmaker market of the New York Stock Exchange. They don't buy or sell securities from their own account. They're just simply matchmakers. How's the New York Stock Exchange ICE organized? They have about 1,400 exchange members, acquired by Intercontinental Exchange in November of 2013. Members can buy and sell securities on the exchange without paying commissions, so they can increase their profits a little bit that way. No commission trades. 2005 April, seats were selling for $1.62 million. The record price for a personal trading license is $4 million. Today, they break that down to personal trading licenses of $50,000 per year. The individual seats sold back in 2005 were going for $2 to $4 million. Now it's just more like a PSL at a Eagles or Giants or Steelers game, where you can buy them for multiple tens of thousands each and every year on a recurring basis. This entitles you to buy and sell stocks on the floor, no commission. Most transactions are handled electronically, getting more and more electronic. I used to be very paper and phone oriented. There are designated market makers on the floor of the New York Stock Exchange, floor brokers, supplemental liquidity providers, and floor traders, but they're becoming fewer and fewer people walking around on the floor, no running allowed on the floor of the exchange. There are specialists or market makers, designated market makers. They must maintain a fair and orderly market for the securities that are assigned to them. It might be IBM stock, for instance. They want to maintain a fair, orderly market for sales and purchases of IBM stock. They post bid and ask prices, stand ready to buy at bid, sell at ask. And they are also dealers for their own accounts and promote liquidity in the stock that they are responsible for. Floor brokers are NYSE members, and they're members of the big investment banks you can see listed here, trying to get the best price possible for their customers. And like I said, employees who are members of the big brokerage companies are floor brokers. Supplemental liquidity providers are investment companies that trade just for their own accounts. They don't operate on the floor. They trade electronically by NYSE Direct Plus, and NYSE Direct Plus is now more and more accounting for a larger and larger percent of trading each and every day. As I said, the NYSE is becoming more and more electronic, taking on some attributes of the NASDAQ. Floor traders independently trade for their own accounts, trying to buy low, sell high. And number of floor traders declining significantly over the past few decades as just basically the total number of folks on the floor of the exchange. The business of New York Stock Exchange is to track and process order flow in a calm manner. Millions of individual investors, thousands of institutional investors buying billions and billions of shares of stock, and they have to keep things orderly. 2 to 3 billion shares per day at the New York Stock Exchange and also at the NASDAQ. NASDAQ was a newer of the two exchanges, founded in 1971. It's a computer network. No trading going on in that building in Times Square. Used to stand for National Association of Securities Dealers Automated Quotation System. Now, if you ask someone at NASDAQ, they say it just stands for NASDAQ, meaning the name of that exchange. Many days, trading volume is higher than the New York Stock Exchange, which has been around since the late 1800s. There are two key differences between the NYSE and the NASDAQ. NASDAQ is a computer network, multiple market makers. It's a dealer network, not an auction market like the New York Stock Exchange. And again, no physical location, even though they do have that space in Times Square. No trading going on there. 3 separate markets, Global Select NASDAQ market, 1,200 companies. The NASDAQ Global Market, 1,450 smaller individual companies. These tend to be smaller, small cap companies, small market caps. Sometimes they move up to the NASDAQ National Market. Sometimes they make the jump to the NYSE. But lately, companies have been staying and are very happy with services provided by NASDAQ as it grows. And finally, there's a third subset of the smallest NASDAQ members and companies, 650, comprise the NASDAQ capital market. So 3 segments of the NASDAQ that are out there. Bid and ask prices for the NASDAQ listing are the inside quotes. You can view these quotes if you trade heavily, for instance, with Fidelity or Charles Schwab. They will give you access so you can watch these level 2 quotes showing all the posted bid and ask prices, and you can watch and you can make your determination either for a small fee or if you trade in large quantities with a certain broker. These are level 2 quotes, and you can also get, you can't get level 3 quotes. Those are reserved for the traders on the floor. The success of the NASDAQ national market can be judged by its ability to attract stock listings. So generally, companies, when they're new, high technology companies in a lot of cases, jump on to the NASDAQ first, and a lot of times these days they stay there. So these companies first listed on the NASDAQ, and they remain on the NASDAQ as satisfied customers. Finally, we want to learn to read a stock quote. And this is on the last page of Chapter 8, and also the last slide of Chapter 8. From this chart, this is a stock known as Costco, C-O-S-T, is the stock symbol. What you see listed either in New York Stock Exchange or online, you'll see these very same types of columns and listings. You have to know how to read them. You can see the previous closing price yesterday. You can see the high and low prices for the last 52 weeks. And if the price goes up above that high, it will be listed as a new high tomorrow. It shows the stock symbol, which is Costco's C-O-S-T. It shows the dividend yield, first annual dividend in dollars. So first annual dividend, then dividend yield, which is the annual dividend by today's closing price. It will show the PE ratio so that you can compare the price to earnings ratio with others in the same industry or other industries. The volume of shares traded in the day, and you can see in this listing a massive number of shares traded just in this one stock. You can see the closing price for the day, and you can see the net change from yesterday to today. It's just the difference between previous close, which was yesterday, and today's close, down 99 cents. So very valuable information on these stock market quotes, either on Yahoo Finance or in the New York Stock Exchange or in the Wall Street Journal. You need to be able to read these, so pay close attention to this last slide in chapter number 8. Hope you enjoyed this session on stock valuation and stock markets.